We are seeing, at least for now, those traffic volumes like plummeting because of infections continuing to rise. When can we expect that reflating China story to play into the market?
Well, thanks for having me, Shery. Great to be on your show. Like we've seen in other countries in the last year or so, when the reopenings happen, it always has been accompanied by a surge in cases, and which does scare populations. People tend to stay at home. And I think, in terms of timing, we'll have a difficult December and probably January. But then beyond that, from February onwards, we should start seeing activity recover. We've seen that playbook before. So has the Chinese government. They're probably much better informed than countries which were earlier in this COVID cycle. So I would expect the economy and markets not to suffer too long before they start really recovering on this or reopening.
And Rajeev, on the other side of your EM call, you're also talking about a potentially more dovish Fed, really helping EMs and commodities. What about a potentially more hawkish BOJ? How would that impact your call?
Well, the hawkish BOJ, which was signaled quite clearly earlier this week, for me it is quite a pivot, has an impact on the dollar and is leading to a weaker dollar, not just against the yen, but also against other currencies as well. And I think that's also one positive component for emerging markets, that once we start seeing a dollar which is not so strong, it is positive for emerging markets because financial conditions which tighten in EM when the dollar goes up are now starting to calm down. So I take it more as a positive. But that's true. Having central banks tighten is never a great thing. But in this case, the dollar effect, I think, will dominate the tightening in Japan itself.
When it comes to positioning in China, though, how much of what we see with the reopening and the way that it's being traded could actually see a sell-off on the fact? Does that depend on how straightforward this reopening is, given that we know that, as Belle mentioned, when it comes to things like traffic and consumer sentiment and broader sentiment, we're seeing that really take a hit as COVID runs rampant in China?
Well, I think one factor is that valuations are very, very low. So the starting point is that equities in China and in emerging markets more generally are cheap on a number of valuation measures, relative and absolute across time. So we start with a cheap position, and then we have this big news which comes. Sentiment is indeed poor because right now things are difficult. But we know that these policies, together with a more relaxed attitude towards private enterprise that we've heard over the last week, and also a more supportive policy towards real estate, are going to address some of the reasons why China has slowed down so much in 2022 and is setting the stage for a stronger economic recovery in 2023. And I think that will be positive for asset markets.
China tech, does that form part of your bullish scenario for China? Is the worst over, particularly now that we've seen, at least a verbal signal that the policy for wanting to encourage private enterprise has changed?
I think it is a signal which is important. Chinese tech was very reasonably priced a month ago and still is right now. It has more room to go up. I mean, this is a huge market, and the Chinese have been early adopters of a lot of e-commerce, and I think that'll continue. And so I think it is a turnaround for Chinese tech as well. Doesn't mean it wouldn't be volatile, and we're seeing that volatility play out. But at the end, investors are going to have to take a view and enter positions over a period of time.